And I'm Heather Branch here to ask Mike about his ideas on what you can be working on now to better prepare for your financial future. Figuring out the retirement plan that's going to work for you and your goals is what Mike and his team are here to help you do. Lifeplanwealth.com is where you can start your own conversation with Mike and his team. We also have links posted in the show notes, or again, visit us anytime at lifeplanwealth.com. All right. Something I'm not sure that we've ever talked about, you and I, on this level is the idea of cryptocurrency.
Mhm.
And I guess, is
We're
crypto
due.
the
We're
all-encompassing,
due for
or is it digital? Is it digital currency? Like, what's the all-encompassing term for it?
So cryptocurrency is just a concept, right? It's the overall
So crypto
picture.
is like the umbrella that everything
Right.
else falls under. Okay.
Yeah.
The conversations around it have been all over the place, just random, a random smattering of celebrities getting involved and people going to prison, and
Yep.
it's like, so it's very for me. I'm like, I'm not touching it. I get very nervous thinking about it. I really feel like it is only for the people who really know what they're doing, one, and two, have money to burn. It's
Yeah.
like, don't get involved if you don't have money to burn.
Mhm.
And for many people, the idea of cyber currency, they think that it's just a fading thought. For those people, you might need to think again, because as it would turn out, Bitcoin has been setting record highs. There's this article talking about investing in digital assets is not going away, and that it should be considered by financial advisors. I guess they're saying
Mhm.
advisors should be talking about these things to the folks they're working with.
Yeah.
But we talked about before how the financial advice you're doing is not just the standard financial advisor growth portfolio. We're talking about the second phase of our financial life in your office, the retirement phase. We've got to now shift our focus from growth to preservation and income generating.
Yeah.
So does crypto belong in a retirement portfolio then? And if so, how?
Yeah. So cryptocurrency, we need to understand a little bit about where it comes from to understand where it's going.
Okay.
So cryptocurrency in its infancy, and this is going to scare some people off a little bit about it.
Okay.
But
Yeah.
if we understood how a lot of businesses started in their infancy, we might not use the
You would get,
products we use.
you'd be like, what?
Um, but cryptocurrency at its original core was used as a black market exchange of money for drugs, guns,
FYI.
all types of stuff.
Yeah.
It was because
It's
this
like a
thing is
dark
like
market, a dark web.
it was.
Way
It actually
to,
was. It was built on the dark web. It was built
Okay.
on this
Hmm.
underground exchange of illegal goods and services.
Wow.
Right, which
I didn't
is
know
like,
that.
oh yeah, and there's several documentaries about the history of it, and that's what it started. And people think it's this new thing. It's been around close to 15 years. So the thought that it's this passing flash or passing fancy, it's 15 years old. It's a couple years younger than Google. So it's right there. But we need to understand where it came from. It started out as the idea of the free exchange, unregulated, of finances for goods and services. Okay, so if we understand that, we say the whole goal is to help me pay you without the government having an intervention. As you can imagine, the government hates that.
Sure.
They do not like the concept of a free exchange of goods and services without them collecting their sales tax or anything else. So that's where it started. And then it built to a certain point on the dark web. And then it kind of blew up in the little bit like 2011, 2012, got popular. And then it really pulled back because people realized the dark web element of it. And then it kind of sat for a while. And then it started growing 2016, 17, 18, really blew up to a crazy point. Because, like anything else, we're talking about Bitcoin or cryptocurrency as a whole, not any, Shiba Inu coin or Dogecoin. Like the concept of digital currency is not going to be replacing, in my opinion, right? It's not that we're trying to replace the American dollar as how I buy stuff at Kroger, right? But so much of our currency is already semi-digital. Like when I go to Kroger, I hold my phone over the tap. They then have permission to draw money from my credit card or my debit card or my bank account. And that's a digital exchange. Not once did I pull out a couple quarters and a couple dollar bills and do it. It's a digital exchange of currency.
Yeah.
So a very similar concept, but yet when we call it Apple Pay, we're more comfortable than with cryptocurrency because at least it's dollars we're exchanging. The concept is to say, I
Also,
want
the,
to,
the trust that people have in Apple, like people are like, oh, it's Apple, it's fine. And I mean, you can't fault them for that. I mean, Apple's got more cash than the American government. So,
yep. And it feels like, well, I have control over it,
okay.
right? Like
Yeah.
I'm choosing where it comes, when it goes from. Well, cryptocurrency, that was the design. It's unregulated. It's going to move forward.
Okay.
Then what form it takes is what's going to be what changes over time. There's a couple that have hung around the whole time. Bitcoin has hung around because it's the foundation. Blockchain, that's the other one people talk about. That's the technology that creates Bitcoin, um, and other digital assets. Ethereum is a platform that they exchange it all on. Like there's all these things that are built into it. It's a much more comprehensive structure than people give it credit for because people think of it as it's just like a fool's gold, right? No,
Right.
if people are putting real money, and that's what the history has been. It's been this free exchange, and it's gotten less dark webby. That's not a term, but it's more of a
It's a
legitimate
term
exchange. Meaning,
today.
I was just somewhere the other day where there's like, yeah, you can go get Bitcoin out of this ATM. Like
I've
I'm
heard of
like, how?
Bitcoin vending machines.
Bitcoin vending machines. There's pizza places that accept Bitcoin, and all you do is like because again, Bitcoin's like $70,000 right now per
Yeah.
Bitcoin. So you're
Yeah.
exchanging off like 1/1000th, third, But it's just because people understand that this is going to be part of the future. And if you think back to 2002, uh, late 90s, early 2000s is when PayPal was becoming kind of popular. And obviously, Elon Musk helped build that. And I remember people saying, I'm not putting my bank account information on a website for then you to take my bank account and go buy me stuff. Like that was crazy. Because why?
Mhm.
I don't trust that. That's not regulated. The government doesn't have any say in it. And the government didn't like PayPal because you could exchange it. And we still see today where the government's trying to come in and start regulating PayPal, Venmo, Cash App exchange of money, $600 or more. But yet now it's mainstream.
Yep.
People, my parents use PayPal. There
Yep.
it's seniors use PayPal all the time now. 25 years ago, it was basically crypto. It was this concept of digital currency exchange that there's no way it's going to be trusted. Now we've turned a corner with crypto where the government, the SEC, they are regulating elements of it and making it part of mainstream. They are approving, the SEC approved cryptocurrency ETFs, exchange traded funds, as long as they're done by major financial houses, as long as they're done by
Mhm.
major firms. Um, we're talking about a major shift in the market where it's legitimized now, and it grew fast without like legitimacy, if you want to call it that. Again, it's legitimate among people who accept the concept, but
Mhm.
against everybody else, they're like, nah, it's ghost money. Now it's a real thing, and it's going to be a real thing. And this articles we're reading about it more and more. If Merrill Lynch and Morgan Stanley and Edelman and all these huge firms are allowed to use crypto in their portfolios, guess what? Billions of dollars just went into crypto, and it just got much more legitimate. So as
Hmm.
a result, once big money backs it, because that's the thing, Morgan Stanley can
Yeah.
walk in and say, all right, out of our trillions or billions of dollars, I'm going to put in 70 million. Well, that can move the needle on crypto as a price by 2 or 3%. And then Morgan Stanley and Goldman Sachs and all the big ones move in and they say, we're going to buy our 100 million, 150 million. And then here's the tricky part. It's like a self-fulfilling prophecy. The more people put in, the higher the price goes, which means people put in more. And then the more people put
Right.
in, the higher the price goes, and then people put in more.
Yeah.
And so it's not surprising that they're going to have this exponential growth, and then it'll pull back, and people are going to say, "See, I told you." Even though the housing market does the same thing, and the stock
Right.
market does the same thing, right?
Right. Right.
2 years ago, Netflix lost 60% in a year. Disney is down 80% at one point from their high point, but yet people still buy those. And then crypto loses 30%, and they see it's all a scam and a lie. So it's
Mhm.
part of our life. It's going to be here, and it's going to get more legitimate over the next 10 to 15 years. And the firms that can find a way to utilize that in their portfolios appropriately are going to be the ones who have great wealth making opportunities but if you could do it without overexposure to risk. So to your question,
Well, I
how do
was going
we,
to say, I mean,
yeah,
it sounds like this is kind of a, a long game at this point where it's kind of like where we're taking crypto where it is right now and where will we be 20, 30, 40 years with it. Okay, if you're an investment bank, you need to be thinking about the long game here. But
Yeah.
for a retiree, we talk about all the time, we got to reduce risk. We've
Yep.
got to you have arrived at age 65 with $2.5 million in the bank. You've won the game. Why are we risking it?
Yeah.
But we also want to stay relevant with our investments. We also want to, even though we want to reduce risk, we do need to find growth opportunities.
Yeah.
So, I mean, I'm sure that there is a space for any investment within certain portfolios, but
Yeah.
generally speaking, for, I guess maybe we say for your average investor, your average person who's getting ready to retire or is just retired,
Yeah.
is crypto something that we need to be factoring in?
I think it's something worth looking at. I think of it
Okay.
as in a lot of portfolios, we do dollar alternatives. So we'll do things like, all right, I'm going to have some gold, some silver, some precious metals. I'm going to have some crypto, things like that, right? Because if you look at your portfolio as a whole, now I want to make sure I'm clear on this. Each person's situation with crypto is very specific and unique. If
Right.
you're ever going to invest in anything speculative, whether it's crypto, whether it's trying to get on an IPO of a company who's launching or dollar or penny stocks, whatever, you need to have an understanding of the risk, good and bad, of
Mhm.
what could come and what could go. So we had a client who came in, and it's a difficult story, but her husband had passed and had left her a sum of money,
Mhm.
and she had a relative who decided that the best thing they could do is invest long term. So they took about 25% of our portfolio and bought Bitcoin in September of 2021,
Mhm.
which was the high point of crypto. And it proceeded to lose about 80% of its value in less than a year.
Mm.
And it wasn't a huge sum that this widow was to live off of. It was a regular amount of money. Um, and when we sat down with her and her relative, and they said, well, it's a long play. I'm like, for seniors, the long play might be 5 years,
Uh-huh.
7 years.
Uh-huh.
Um, I had one guy who says, I don't even buy yellow bananas anymore. I'm too nervous that they're going to,
Uh,
but the problem is when people make decisions with too big of a chunk of money, you say, well, as long as I give it time, it's going to recover. Yeah. If you're 40, I
right.
agree. You
Right.
should have some.
Right.
I have some, and I believe in it because I'm 40. But at the same time, if I was 70, I wouldn't have anywhere near the exposure I have now. So I think
Hmm.
that's a major thing. But if we look at it the way, how can someone take advantage of it without being exposed to it?
Right.
Well,
That's a good way to put
things
it.
like
Mhm.
these ETFs, they're a great opportunity. We work with a wonderful money manager from Market Guard, and he has a crypto portfolio that's put together. It's done exceptionally well. However, it has quite a bit of volatility because it's crypto.
Right.
So, not surprisingly, when the market's good or when it's doing well, it makes really good returns. So, to take an overall portfolio and say out of the overall portfolio, if I commit 3%, 5% to a fund like that, well, what happens if the 3% completely disappears? Let's say it goes up in monopoly money and it's gone. Will it kill us? Well, for some people it could, but other people it won't. They say no, 3% is no big deal. Because if I make 10% on 3%, all right, I made 0.3. If I lose 10%, I only lost 0.3.
Right.
So it's kind of that balancing act. But no, you shouldn't be all into it, but you shouldn't be deathly afraid of it. It's going to be around. Again, it's about 15 years old and it's going to keep growing.
Okay.
So we should be aware that crypto is here to stay. However, 20-year-olds should chase the newest thing. 60-year-olds should be with the stable thing, right? You don't have to be in, someone comes out on X or Twitter and says, hey, this is the new coin that's going live. Don't do that. But what you
Right.
can do is you can buy fractional shares of Bitcoin, and you can buy some fractional shares. You can buy some Ethereum, buy some Litecoin, things that have stood the test of time. Don't put them on a Coinbase wallet. Like, don't keep it on some other platform. Make sure wherever you're investing, it's on your platform. That's why I love what we do with Market Guard. Market Guard actually invests in the stuff. We just get to reap the benefits of it. We
Okay.
don't. Our clients who are using that portfolio, they don't actually own Bitcoin. They are investing in cryptocurrency as a broad stroke. When
Okay.
crypto does well, they do well. When crypto pulls back, well, they pull back a little bit. But again, we don't overexpose people to it. But it's one of those things. Do you want to do all the research and work yourself?
Right.
Or do you want to hire someone who does all the research for you? When it comes to things like crypto, I hire somebody because there's so much to learn. There's so much to know. And there's so many opportunities, and you need someone who goes through and with their little sifter and figures out what's real gold and what's fool's gold. And I think that our guys at Market Guard do a really, really good job of that versus a lot of other platforms I've seen where they just write it. It's fine. I'm like, no, I don't want a 60, 65-year-old to write it.
It's a different mindset. It's a different set of priorities.
Yeah. You can have a retirement planning money manager who also knows how to grow your money. And that's just one of the unique things we've used with our portfolio, that particular portfolio with Market Guard. It gives you the opportunity to participate in the world without being beholden to it. And if you can do that, you don't have to be the client who's been on that end of it. You can be someone who says, yeah, my Bitcoin portfolio, it went up 32% last year. Holy cow, how much money did you make? Well, I put about 5% of my money in. So, I went up, 1.6% on my overall portfolio because of it.
Right.
It's not going to kill you, but it deals with your FOMO. It deals with the fact that you're afraid of not participating in a growing asset class. You do get it. But then when it has its inevitable pullbacks, you're not crushed by it. And there's a saying that I judge others by their actions, but I want to be judged by my intentions. And so I want people to see me and be like, oh, but I'm sure he meant well. But I look at other people and say, look what they did. That's what they're being held accountable for.
Yeah.
People hold Bitcoin responsible for their actions, but they let the broad market be held to its intentions. So when the NASDAQ lost 30% in 2022, the NASDAQ dropped 30%. Not one person said, see, I knew the NASDAQ was fake. I knew it wasn't real. No, they're like, oh, crap, that was a pullback.
That's just the market.
We should probably participate in the rebound now to make it up. When Bitcoin dropped 30%, people said, bunch of smoke and mirrors. It's not going away. You don't have to be in it. You can build a completely successful portfolio without it. So I'm not saying every retiree needs it. I'm just saying everybody shouldn't be deathly afraid of it either. I think that a reasonable approach to
careful.
Anything. Yeah.
Don't be afraid of it, but also be careful, right?
Don't put a quarter of your portfolio into it at 65 years old as a widow with money your husband left you. Don't do that. But if you really want to participate, if you want to figure out how to build it into a retirement portfolio, on our website, there's a button that says Start Your Retirement Roadmap Today, lifeplanwealth.com. Start your retirement roadmap today. We have these conversations saying, hey, listen, here's how Market Guard is changing the way retirees can invest in crypto without being overly risky, without being there, without being exposed. And here's how we build an appropriate portfolio that says we want this much here, we want this much throttled back if the market comes back. How do we, it's all those moving pieces. And to have those conversations, click on the button, Start Your Retirement Roadmap Today, lifeplanwealth.com. And we'll talk you through how crypto can be participatory in your portfolio, but without being potentially, but without also being it's not the lead sled dog. You know what I'm saying? It's just along for the ride.
I think for so many of us, even well into our retirement, perhaps if you're a DIY investor, even more so, you've got more free time in your retirement. You don't lose interest in your opportunities. The whole conversation around crypto has been very interesting. And a lot of people just want to know if there is space for crypto within their savings plan. So again, don't be afraid of it, but also be careful. Yeah. And perhaps get yourself a coach to guide you on the process. That's what Mike and his team, that's what Mike is here to be with and for you, a guide along the way of not just crypto, but the entire investment conversation. When you are in retirement, you got to think about it differently, but you don't have to do it alone. Mike is here to help. So again,
I should probably throw this out there. This was not sponsored by Market Guard. Market Guard did not say, hey,
or Bitcoin,
you know what we should
or
do?
Anything. Yeah.
No, it wasn't sponsored by anything. I just think that it's like when you go to a good restaurant and you're like, that is something worth talking about.
Yeah.
That's kind of what we found with them. So by no means is Market Guard sponsoring this. However, when someone does something right, you give them an attaboy. And that's kind of when it comes to this particular portion, I think Market Guard gets an attaboy where other people don't.
Okay. lifeplanwealth.com. Again, the website. If you want to talk to Mike about your retirement investments, crypto, and everything else that's involved, he is here and ready to begin that conversation with you. We also have links posted in our show notes. So you can just click there or again, visit us anytime at lifeplanwealth.com.